our first project in Wheat Ridge, Colorado, we had all of our units pre-reserved. We were almost complete with construction, and there were some technicalities with the city that we had to work out that wouldn't allow us to contract with our buyers. So it had 40 units, 40 buyers, and then 9/11 hit. And I lost 60% of my clients that night.
Wow.
Right. 60% of my people, I had voicemails, and, back then your answering machine, right?
Yeah.
And everybody just ran for the woods, high uncertainty. It was like a luxury purchase and things like that.
All right. Invest in Flex Space Season 2. Back with Stephen Rivers and our great guest, Steve Garrison with My Personal Warehouse. Obviously, we're glad to have you here. And
thank you.
All your experience over the years in, developing, investing, cooperating, fundraising, condoing, everything in the flex world. You've done it for a long time. And so give us an overview on My Personal Warehouse and how you started, where you're headed in the future.
Great. Well, thanks. Thanks for having me. Appreciate it. So this goes way back, right? So about the mid-90s, I got involved in the real estate business. I worked for a private mortgage banking firm, and we were providing the financing on converting multifamily into for-sale condominiums. So that's where I learned the condominium side of the business, and then got this developer itch to try to get into the business. And at that time, everybody that I talked to, I was like, why isn't there any small bay or small industrial space in the market? And everybody said the same thing. They're like, people won't pay the rents. They're too expensive to build. People won't pay the rents that are necessary to make it profitable. It just doesn't work. So I had this ownership mentality where I was taking for rent and turned it into an ownership product in the residential side. So it dawned on me, I was like, well, I wonder if people would buy these, right? If people would buy them, maybe the math would make more sense. So I traveled around the country, went and found about 5 or 6 small developments that were condominiumized small bay warehouse in luxury places like Port Clinton, Ohio, in February, and went and looked at a bunch of these projects and kind of took bits and pieces from projects that I saw that I liked and came up with my own kind of version of it and did my first deal in Wheat Ridge, Colorado, and it worked. People bought it, and at that time we were definitely more of mini storage on steroids type concept, metal buildings, low quality, low cost, no amenities, just like a heater, overhead door, insulated building, and that was about it. So it's evolved considerably since that first project in 1999, and now we're in 7 states and doing a lot. So we're growing, expanding, and trying to have fun. We're having a lot of fun most days, but yeah.
Well, and it's funny. You've done, anybody that I know that knows you or knows your model, I mean, one thing that I think you've done well is you've kept especially as of late, a very consistent looking model. So when you see it, it looks like
Right.
My Personal Warehouse model. How did you come up with that? How did you figure out that's kind of the thing to do to really capture value and recognition?
I think there's a lot in a brand, right? And we tried to get on that early, and that when people saw it, they knew that it was ours. And we saw that there were more and more people coming into the market, and we didn't want to be confused with other people. Now, granted, we have kind of a modern contemporary look, and in the hill country of Texas, we're more of a black and white type hill country type look and feel. But, that was really important for us to have a consistent look and feel, and something that would resonate with the market and stand out.
I was trying to think of recently, because I'm big on branding. I talk about that all the time, not just with real estate, just with any kind of business, right? To be recognizable. And I was trying to think of old real estate projects or companies that had it. And the only one that I could really think of since I was a kid was U-Haul, right? They just have that giant orange stripe on pretty much everything. And so even today, when you see that, you kind of notice that's what it is. And even when you think of moving or moving trucks or anything like that, you just still, or at least I do, you still think of U-Haul. And so I'm big on branding, and I think y'all have done a really good job. And I think that's something that a lot of people in the real estate business that are trying to expand nationally, more and more. That's one thing that I really hit on them for, because especially if you're looking to maybe sell in the future as a giant portfolio, obviously a branded portfolio generally sells for much higher than just a hodgepodge of stuff.
Right.
And so I think you're probably one of the original guys in the flex world that I could imagine that kind of started that. So kudos to you.
Thank
One
you.
thing I was going to ask you, I know you do a lot of condo models. What is your preference as far as building to condo and sell, building to lease?
Yeah.
So I know you do a lot of development on that side.
predominantly we've done for sale. We've been a merchant developer, building projects, condominiumizing them, and selling them. And that's been a model that's worked really well for us. Our equity likes that. They like to turn their capital quickly and frequently, but it's a little tiring, right? I like having a bigger balance sheet. We're definitely moving more into creating a portfolio and doing conversions and acquisitions and building for rent product as well, and having a balance, So I think that's where, with a lot of the changes in the market and construction costs, we're seeing that we need to balance ourselves between being that for sale developer as well as the for lease side of the business.
Do you think the condo model still has a long runway? Because we don't deal in a lot of condos on our side. Obviously, we're mostly on the investment sale. But, over the years, Steve, I just have seen those prices just go up and up and up. And I feel like at some point they have to flatten out.
So the answer is yes. I think ownership is always going to be attractive to a large segment of the population.
Yeah.
We've been wondering for years where the ceiling is, and I think we found it. Right?
Yeah.
We're selling stuff for $400, $450, even like $500 a square foot up in like Bozeman, Montana.
That's wild.
But the costs, the costs are crazy. So we're selling, we're doing deals, not the volume that we're doing at the lower price point. So I think it's really comes down to what your objective is, how your equity is structured, what your long-term goals. The ownership model is a great way to unlock your equity, right? And you can still keep some or all of the units for sale or for lease. You're not committed one way or the other. In residential, if you have a condominium project and you have too many investor owners, it's what they call a broken condo. Well, that doesn't exist in commercial because all of the financing is already bank provided. It's not a Fannie Mae, a Freddie Mac type financing model. So there's no real such thing as a broken condo in commercial so long as the HOA has good reserves and liquidity and things like that. But anyway, I think the condo side is alive and well. I think it needs some more affordable product in the market. We've been the premium provider for years and years.
Yeah.
And we're going to definitely be providing some lower cost alternatives.
See, and I may be biased because we just sell leased investment, small bay industrial parks, but I just always believe that, obviously condo sales, we see them, they do really, really well, in a lot of areas. Obviously, y'all have done very, very well. The reason I like the lease side so much is because regardless of where the market's at, it's still there because, if interest rates are just kind of sky high through the roof, maybe the economy's not doing as good, that will sometimes put a little people into, reserve mode, maybe not wanting to spend their money on a owned project. And so the lease side, will kind of benefit from that. And you see that on the home side too, right? People will, that's why, BTRs and the rental side are so big. And so, like I said, I'm biased on that, but yeah, y'all have done very well on it. And, the car condos, all these luxury garages and storage garages that are being built all across the U.S. I've just always seen them go up and up and up. And I'm like, they have got to cap at some point.
So I think we've done the industry a great favor by doing the condominium size because we've been able to pull sales prices and rents up.
Yeah.
So we offer all of our units for sale, for lease. And, back in the day, we were $12 triple net. I'm getting $25 to $28 triple net, So we've pulled the quality up. We've pulled the rents up. Every market that I go into and I start a new for sale project, I'm 40 to 50% higher than market on sale price and rents, right? But it's that ownership lead-in that allows us to set the stage for that comparable in the market, and then the rents follow, right? So, but I agree. Look, the rental side of the market is very deep. It's very broad. As long as you can hit your rents that you need to hit your pro forma. But I think the for sale side has allowed us as an industry to get there.
And Steve, you said on these products you're offering for sale and for lease.
Correct.
Does that open up a competition within like your own product? For example, you have an owner now that buys a condo and they potentially now want to lease out themselves, but you're also leasing in the same development. How do you like control all these moving parts?
Great question. So we try to limit in our for sale developments where maybe 30% are for lease.
Okay.
Now, we can't truly dictate that. We can't. If you're an owner, I can't tell you that you can't go lease your unit.
Right.
We lease directly ourselves about 25 to 30% of all the units. And then we turn around and sell those as pre-leased investments to investors. My business partner, Eric Graven, and I, we personally own probably, I don't know, 18 or 20 units. If you get to maybe where it's like 50% investor, 50% ownership, that's where the dynamic starts to change a little bit, right? Okay. Where the profile of a tenant is not the same profile as an owner.
Yeah.
So what we've been looking at are doing larger developments where, one side of the development is going to be condominiumized for sale only, okay? And the other side is going to be a more of just a for-lease traditional, kind of like what you're dealing with in the small bay side,
Will that include restrictions that those that buy are not able to lease?
Can you even put that in?
Yeah,
it seems a little tricky.
We're not going to do that. You kind of set your own bear traps in this business, so you got to be careful of that.
Sure.
Buyers like to be around other owners, right? Owners like to be around owners, and tenants don't much care.
Yeah.
And I think a tenant will gladly take a B product versus an A, generally speaking. So maintaining flexibility and then value is huge, right? So you have to be careful.
Yeah. I want to actually go back to your origin story because I know you said you traveled around the country kind of looking at the product, but what spurred that moment? Because you were doing mortgages.
Yeah.
But what actually spurred you going, hey, I want to look at warehouses?
That is a big difference, yeah.
I missed that part because you kind of jumped and just...
You didn't grow up dreaming to be a warehouse developer?
Right.
So, good question. So I grew up on a ranch and in the middle of nowhere. I actually went to a 2-room elementary school in Colorado, okay?
Wow.
So we were like way out there. And there was a wealthy rancher across the road, and he built this giant barn, okay? So he was from Colorado Springs, and he was a wealthy farm and ranch guy, real estate guy, and he built this barn, and all of his buddies gave him some money to buy literally a stall in his barn on his ranch. And I was like, why are they doing that? Why? And then you start, didn't make sense to me. And I was like, cool idea, terrible structure, right? So that thought stuck with me. I saw that probably 10 years before I really got into this. And then, I start buying snowmobiles and toys, and I'm living in suburban Colorado, and I can't find anywhere to put my stuff, right? And I'm in the ownership business, right? So I'm in the business of financing, helping people become owners. And I'm like, why can't I own one of these things? And that's where the whole story about that if they won't rent it, maybe they'll buy it. And at that time, you could own it for about 40% less per month than what I could rent it to you for. The spread was very large. So that's what that seed kind of got me going. And, a lot of people are like, oh, you created a business. I was like, I did a deal.
Yeah.
And it worked. And then I was like, oh, maybe I should do another deal.
Yeah.
And it took a while before, I figured out that this was a business and this is an industry. And that's where we finally got serious and started working on brand and all the different things.
What do you think about, one thing that me and the guys always kind of go back and forth on is the car condos, right? What do you think of the car condos and kind of the trajectory of it? Because there's a lot of people that that call us that want to get in it. They're asking us to do feasibility studies on it to figure it out. They're obviously a little trickier because they tailor to a very strict, personnel type. What do you think of the car condos and the longevity of those?
I think it's a great business. It's been explosive. I think you see most of the developments don't mean this in a negative way, they're ego builds, right?
Yeah.
They're a guy or a couple of guys that are building it for themselves or for a small group of guys, and they do a deal, right?
Yeah.
There's a couple of programmatic builders, developers out there. We initially were kind of going that way. Our first project in Wheat Ridge, Colorado, we had all of our units pre-reserved. We were almost complete with construction, and there were some technicalities with the city that we had to work out that wouldn't allow us to contract with our buyers. And so it had 40 units, 40 buyers, and then 9/11 hit, right? And I lost 60% of my clients that night.
Wow.
Right? 60% of my people, I had voicemails and, back then your answering machine, right?
Yeah.
And everybody just ran for the woods, high uncertainty. It was like a luxury purchase and things like that. So the following Monday, I went into my office and I had 46 voicemails the next Monday. And what was really interesting is I'd been marketing to guys that owned RVs, boats, and cars, sport motor enthusiasts, collectors, people like that. So I lost all those folks. And then the following Monday, my phone lit up and it was the same client, but they wanted it for business and not for their personal use. And they said, hey, I'm concerned about the economy. I need to contract. I need to be more efficient with my money. And 90 days after 9/11, we were 100% sold out through title. Okay.
Nice. So these are people downsizing.
Right.
In other words, they had a different location.
I'm in 5,000 feet.
Right.
I want 1,000.
Brilliant.
My partner's going broke. I need a place to put my stuff. Just luck, right? But that's when I realized it's the same guy, right? The guy that has the RV, that has the cars, that has all those things is the C-suite. He's the entrepreneur. He's the business owner. He's all of those things. And he chose to use it for business. So we felt like being more focused on small business users was more security. In a good market, people are expanding, growing, starting new businesses, and they need space. When things get bad, what do? They contract. We're like the last stop before self-storage in your garage.
Yeah.
Right?
Yeah.
So we've actually, in some years when, 2008 and some things like that, we did really well because we had more people competing for our small spaces. Right. So it just kind of worked out. So the garage condo thing, I like it. We built some. I keep having that same feeling that I have about where's the ceiling and how many is too many and how deep is the pool, right? How wide and deep is the pool? I think done properly in the right demographic areas, it's great. Sport motor enthusiasts don't want to be with business owners. Yeah. They want their own community. Yeah. One of the things that I see is that people develop these projects, and when they go into planning, they give up business use. They give up a lot of things to get that approved. And if that doesn't work as a sport motor enthusiast community, it's almost impossible to go back and get a zoning change to get your site plan reapproved. You didn't have enough parking. There's a lot of issues. So I like it. We do some. We're going to continue to do some, but I like the business side. That's my preference.
What was the size of your first development and the size overall and the unit sizes?
40 units, 40,000 feet.
Oh, okay.
1,000 square feet.
Okay.
Did them all the same.
1,000 square feet. Wow. Yeah. Okay.
What size do you like now? What's your favorite size now?
I like variety.
Yeah.
I never build the right size.
What do you mean?
Well, I take a lesson learned from every project, right? So, I'll go to a project and I'll build it, and I built small units, and in that market, everybody wanted bigger units. Great. So I'm going to build bigger units in a different market. They want small units, right? So we spend a lot of time developing our plan and our unit mix that we're diverse. I look at so many plans that architects and engineers lay out, and they're all the same. And that's a real problem. So we really try to have everything from 800 and maybe even a couple smaller than that, even up to a 4,000 square foot unit. So for us, it's about flexibility and design and creating a modular unit mix. You want to drive through 2,000 square feet? Great, I'll leave that back wall out, right? You need 2 units side by side? Not a problem. I can do that. So I think having that adaptability for the market, reaching the broader market is the best thing that you can do rather than building one size. Now, our average size, about 1,125 square feet. That's over 2,000 units.
From a development standpoint, right? Because I'm thinking here about what you're saying, and we're developers or wannabe developers compared to you. But I'm thinking about this idea of, okay, hey, we want to be flexible. We want to offer all sorts of sizes, and a client comes to you and you can work with them, right? Now I'm thinking, the first issue that comes about is like, when you're going to permit, right, a plan set, they want to know what size your units are. Yeah. And it's not as easy as you make it seem to move walls. So but I'm sure there's a story to that. So how are you kind of like working that out on the end where you're going to the city, getting something permitted, but then once your clients come, you're able to kind of flex?
Thank you. Well, you have to commit but be flexible, if that makes sense.
Yeah.
So
like marriage. It is.
Well, you can give me some advice on that.
Yeah, I'm on
flexibility in your marriage.
I'm on my second, so I don't know if I can give you too much.
Figuring it out the second time.
Yeah.
So you still have to pick your mix. You still have to know how many units you have, what size you have to lay it out.
Okay.
But how many you finish out, how many rear walls you put in, those are the types of decisions that allow you to have that flexibility.
Yeah.
So we're finishing out about 65 to 70% of our units. Okay.
As
So-
planned originally.
per plan,
Yeah.
right? So we're leaving out back walls, side walls, not putting mezzanines, not putting restrooms in. There's things that we're doing that allow us to create multiple larger spaces, drive-throughs, side-by-sides, things like that.
Yes.
Because to your point, you do need to know the structure. You can't do a custom build every time. So that's been our approach, where we didn't finish anything out. Then we finished 100% of the units out. Well, that wasn't very smart. We lost people because we couldn't accommodate them. So we've settled around this 65 to 70%. And how you position the units, what size next to each other, back to back, all those little things make a big difference in, having that ability to accommodate a small user to a 4,000 foot guy.
So that means too, I guess, when you have a client now, you can change pricing up because you're kind of at that point doing somewhat of a tenant or a buyer finish out specifically, right?
Right.
Okay.
And our approach has always been, I'd rather give you what you need rather than what I have.
Yeah.
And we try to position ourselves that what we have is exactly what you need, right?
Yeah.
And, my team gives me a hard time when I'm working on a unit mix because I take hours and hours and days, and they're like, this is not that hard. But it is, to get it right, to have diversity, to have this unit next to that. I mean, there's just a lot of little things that go into it that I probably belabor more than I should, but I think that's one of the most important things you can do in designing your project is really focus on that unit mix.
Can you tell us how you decide on a site? Because you have multiple sites. In fact, can you tell us what all you have going on as far as sites?
Yeah. So completed, done, closed out. We have done 38 projects.
Wow.
We've got some conversions and some things on top of that. We've got another 10, 11 in process right now. Wow. We're doing some acquisitions, getting rolling on that. Site selection, it's hard, right?
It is. It's the hardest part.
It's really hard. So we focus on markets and not sites. And I think a lot of people focus on sites and not markets, if that makes sense.
Yeah.
They're like, I've got this site and it's really cheap.
Right.
And it's so good.
Yeah.
And it's not.
Yeah.
And, that's the cheap land trap, right?
Yeah.
You don't want to get into the cheap land trap. So we really look at a market and say, is this where we want to be? And can we duplicate and replicate and do multiple projects and not be a one-hit wonder? Because you'll deploy too many resources. If I'm not there, I've got to be able to build 3-4 sites, right? Like Austin, we have like 6 locations, right?
Wow.
We've been able to be efficient in deploying our resources to continue to grow and expand our development. So when people are myopic and they're just picking sites, I think they're missing the boat. You got to underwrite the market, right? Then is your site in the right part of that market? Are you in the right area? And then all the other parts that go along with it. So
that's some nuggets right
there.
there.
Did I tell you this guy was going to be a piece of gold or what?
That's some nuggets right there.
I was telling Rivers whenever we were getting you scheduled on, I was like, man, this guy's going to be solid gold on here. Like, I'm going to learn so much just in general, but he drops a lot of good stuff that a lot of people just don't think about. And it's things that are just easy to pass up. And, that site thing that you're talking about, I can't tell you how many people come to us that say the same thing. Like, I got a great site, $150 a foot.
Yeah.
We're looking at it, we're like,
and a lot of times already bought.
It's like, man, you're so far off the beaten path. It doesn't make sense. And land traps are huge, not just for this, but for any real estate asset class, but especially for this, because so many people will go out and, they'll do the, farther off the beaten path, but it's cheap. Or I'll buy this and I'll sell off all the frontage, and then you got to drive through here to get to my park, and it's a little harder to navigate. And so land that's why so many people want to get into this and can't, because it is hard to find that site that makes economic sense, financial sense.
People get anxious. Everybody wants to do a deal, right? Everybody wants to get going tomorrow, and I'll work it out. Oh, yeah, it's difficult.
So with your infinite flex wisdom over the years, where do you see opportunity, or where do you see some of the struggle in this asset class? It's not a new asset class, but it's new to a lot of people. And it's new to a lot of institutions and private equity firms as well. They just don't know about it, or it's kind of been just so far under the radar. What do you see is opportunity that maybe will come up in the future, and what do you think this sector is lacking?
Look, I think there's opportunity everywhere. And when I look at the commercial real estate market on the broader level, I see a lot of flashing yellow and red lights, right?
Yeah, I do too.
Mm-hmm.
And I see that this is one of the few only green lights, but I put my own flashing yellow light on that, is that we've got Wall Street private equity running in, and that's going to create froth and kind of that mentality that you can't go wrong.
Yeah.
And it's development, and it can go wrong badly, right?
Mm-hmm.
So I think done properly with analytics and underwriting markets and knowing who your customer is, and that's what I see more than anything, is people are like, I've got this site, I'm going to build this project, and here's my pretty drawing that I spent $200,000 with my architect to do. What do you think? And I say, who's your client? And they have no idea. Mm-hmm. They have no idea who their client is. So the asset class is great, but without identifying who your target market is, you've got a problem.
Yeah.
And this is not build it and they will come. We're lucky it's predominantly happening that way right now. But as markets have more development and start to fill up, Colorado is a great example. And I'm largely responsible. I built 22 projects in Colorado.
Colorado's got a lot of flex.
It's got a lot. And there's a lot of condo development. And there's a whole bunch of projects I can show you that are 30% full.
We know some mutual guys that we talked about a while back ago. I mean, there's plenty of them because
they've flatlined.
Yeah.
Absolutely. Costs are high. Rents are high. Cost of living's high. And there's a lot of options in Colorado. So I think if you're wise and you understand where you're going and who you're going after, you're going to do well. And you have to make sure that what you build works for that market and that price point, right? So did I answer your question?
No, it did. Yeah, absolutely. And, because you're right. I mean, areas are filling up fast, sometimes with more supply than the market's taking down.
Right.
And so, those are key factors to look into, because you're right. For so long, it was kind of like multifamily a long time ago. Like a lot of people just couldn't go wrong with it because they were riding a really good wave. And now we're kind of seeing the reaction of that over time. And I'm not saying that'll happen in this asset class, but it's something that you always need to be, aware of and cognizant of. And so one thing that I did want to touch on with you, I know that y'all are working on, I don't want to call it an academy per se,
Thank you.
but give us a heads up on, and that's the great thing about Garrison, is he's always innovating, always got something cool going on.
My detriment.
Yeah, he's a huge data. He's a huge data and analytics guy. So when he does site selection, I mean, he's got a lot of stuff that he's looking at as well. Whether it's marketing or anything of that nature. But he's working on something cool that he's been talking to me about that they're unveiling later this year. And I wanted to see if maybe you can kind of give us a heads up and a little preview of what you're looking at.
Thank you.
And it's something that I think the industry is very much lacking, because there's so many people that want to get into it, don't know where to start.
So we've had a consulting side of our business for years that we've done okay, right? And honestly, it was less consulting and it was more like turnkey development. And we really had two different groups. Turnkey development, where you were a high net worth individual or you had a piece of land and you didn't know what to do and you just wanted to pay us to do it for you, okay? So we did a number of those, and those went very well. The other people that we worked with were the people that fell into the cheap land trap, didn't understand their market, and they're in trouble, right? So we help pull them out of the mud, and that's a big lift. And there's no guarantee I'm going to get you out of the mud, right?
Yeah.
So we started looking at that, and we have a scale issue, right? We can't, I don't have 100 people. I have 13 people in my company, right? So we kind of broke it down, and we look at what we do and how we do it, and started looking around the market. And there's a lot of masterminds where people get together and talk, which is great. I love just like today, right? We're just talking and sharing information, but nobody taught me to be a developer. Anybody teach you? I mean, you can go to get a master's degree, but even getting a master's degree, I don't think you're a developer, right? You got to get your boots dirty. You got to fall down. You got to make mistakes. So we started looking at everything that we've created. We have a lot of tools. We have a lot of processes. Over 26 years, you start to accumulate a lot of stuff, right?
Sure.
Yeah. Yeah.
So we decided that we wanted to create something more than is just a mastermind, and create a academic-based masterclass where there's a consulting services layered into that, where you get tools, education, information, access to expertise, and to the right people in the market that are experts. A lot of people, you call an architect and say, hey, I want to build a flex space. The architect's going to say, I'm an expert.
Oh, yeah.
How many have they built?
Yeah.
0.
No, I mean, it's
right. They're not. And people just get misled. And we've made so many mistakes, have lost so much money. It's just unnecessary.
Yeah.
And nobody was there to teach me. And the world's changed, right? Social media, data, information, communication, all of this stuff has changed. So we're planning to roll this out in the third quarter. So we're going to hold boot camps, 2-day development boot camps, which is not me standing up there telling you what you need to do. They're going to be interactive. There's going to be round tables. There's going to be training. You're going to walk away with actual tools and a support group where, we'll review your site plans. We'll help you with your submissions, defining your users, all these different types of things. So it'll be a membership driven thing, and along with the boot camp to try to help people be successful.
Would you be able to help with the number one, I don't know if it's number 1 or number 2 issues that new developers and people that come into business have, is the top 2 things that we always have people call us for is land, site selection, and equity.
Yeah.
Those are the 2 things that it seems like a lot of the new guys just all struggle to figure out.
Yeah. I hope so. And I know you do feasibility studies, and I'm not looking to get into the feasibility study business. We are working on some proprietary data analytics software that will help you understand a market. You and I talked about this. The self-storage industry has amazing data.
Theirs is incredible.
And theirs is, they can tell you any spot in America, the demand per square foot per household. It's unreal.
Yeah.
But that took 30 years to get there, right? So I think our accessibility to data and some of those things right now, we've worked with a private analytics firm for the last 4 years. So we have kind of a benchmark scoring program that we use for ourselves, but we're looking to broaden that and provide that to this group to help you get through that good, better, best market underwriting, and then look at a site and have an understanding of how many potential customers are there. Now, is that a go or a no-go? Not even close, right? But it's hopefully guiding you in the right direction. So that's a big component that we're working on.
And that's huge because, I mean, you're right. And you've been to self-storage expos and whatnot, and I've been to, multi-family events. And when you go to those, you kind of look at it and you go, man, Flex is so far behind the technology curve that some of those guys do have.
Yeah.
And so I think it's crucial that, someone gets that sorted out, figured out, and brought up, because you're right. They do. They have that to where it's like, there is 7 square feet of storage per person in this area, which makes it too much storage, or whatever the number is.
Right.
And it's really cool interactive stuff, too, because we had a storage guy, a good friend of mine, that was kind of showing it to me. I can't remember the software that he was using online, but, I mean, it had a lot of good data that he was like, yeah, this shows oversaturation, this shows too much, this shows this. And so those things are very key. So, yeah, I think helping create and craft that, because our world engine is almost like a 747 overview, right? It's pretty far down. If you don't have binoculars, you're not going to see it. And so having something that can drill down into that, I think, would be very key.
Another problem with the self-storage industry is everybody talks, but nobody shares.
Multifamily is the same way.
Right? So they're all friends. They're all in the same room. They go to the same conferences, and they don't tell anybody that they're doing a deal here, a deal there. And then what ends up happening is on one street corner, and I've seen this legitimately happen, 3 self-storage sites are approved.
Oh, yeah.
On the same thing.
Yeah.
And they all lose money, right? And I think that's probably the biggest thing that we can do in this community is nobody owns a territory and this and that, but we need to share, right? Mm-hmm. Nobody's benefited by me building next to you, and we fight it out and we both die. Right.
Yeah, I agree.
And that's been, even today, the self-storage industry is still nobody says anything until it's like a grand opening, and then it's too late, so that's a problem.
And the margins have been squeezed in the self-storage.
Yeah. I mean, oversupply, costs, rents are going down, capacity. And, the self-storage industry, planners don't like them. I mean, and
that's why they give them these buildings that they have to make that are very expensive.
All the gingerbread and glass and
3 stories. And so they'll sometimes use that to push you away.
And one problem is this asset class gets confused with self-storage
all the time.
100%. Yeah.
every day.
Yeah.
Every day. So you've got to have your wording down. You've got to know what to say. Well, who are your users? What are they going to do in there?
Yeah.
They're gonna store stuff.
No, you don't want to say store. So, yeah, it's I think we're going to see a migration. Wall Street's in self-storage.
Yeah.
They're hitting a capacity. They have free money, and they're not deploying it fast enough. Where are they going to go? This. They're going to come into this market. And so that's good and bad. There'll be a buyer, right? But it's going to create another scale of competition where, literally their cost of funds is zero.
No, and I will tell you, because, storage guys are some of the bigger crowd that's coming into the
They're
small
calling
bay.
me.
Yeah.
Right? So they're like, hey, we know self-storage. We don't understand this space. We'd like some help.
And I will tell you this, and I think I've talked to you about it, one of the biggest mistakes that I've seen them make is, and we've sold multiple of these, is they have a storage facility with, say, an extra 3 or 4 acres next to it. And they'll build a small bay park on it, but it's all in the same thing, sharing the same thing, so it can't be parceled off. Well, unfortunately, when you do that, you're not seeing that when you go to sell. You're not seeing the highest proceeds because your highest paying flex buyer doesn't want storage.
Yeah.
And your highest paying storage buyer doesn't want flex.
Right.
And so that's one of the biggest mistakes we've seen from several of those guys is it's like, man, if there was a way to, move them off, parcel them off, you'd see so much more value. Yeah. But a lot of them just kind of
there's ways to do that,
them. Yeah.
right? There's ways to separate that without subdividing and different things. But
planning for it is going to be key. And so, there's a lot of things that, really anybody coming to the asset class needs to, be aware of. Because, especially with this asset class that's changed so much especially since COVID, is just all the changes that keep happening, staying ahead of the curve, doing the right things, meeting the right metrics. And so I think something of what you're doing, I think would be absolutely huge.
So my design team, they hate me, right? Because they always think that the last version is it. We're done, right? We're no changes, right? And I think we've done that better than anybody is we listen to the market, we listen to the consumer, we try to see where the trends are going, and the next project always has something different, right? We're trying to create more value, more flexibility, anticipate what that next user looks like. And you can go kind of make the donuts and bang out a generic project, and you'll probably do fine, But if it's going to be a higher end, more expensive type project, you need to understand who you're catering to.
Yeah.
And Steve, we have a lot of listeners that are, in the finance industry as well as potential investors that are always looking to put money in a deal. So you have an audience here. What does finance look like for you traditionally, and what kind of investment do you look for in your deals?
We've been blessed to have a family private office that's worked almost exclusively with us, so that we haven't used a lot of outside sources. But we're expanding that. So our capital stack on an average deal is about 40% equity, 60% debt. We go in with a lot more cash than other people because I lived through 2008.
Right.
Yeah, I did too.
Yeah.
And
moved back in with my dad.
The deals that had cash, you can survive. You sleep at night. Yeah, you're giving away some yield and margin to your partners, but it's the right business. I've been surprised that there's some big development firms in Colorado and a couple in Texas that I met with, and they haven't done a deal in 3 years. I'm like, I've done 5, and you're 4 times bigger than me, right? So I think having a good plan with a good site and good access to cash and knowing your market is huge. On the banking side, we tend to deal with smaller, more community-style banks, the Wells Fargos and the Chases.
Nah, a little tougher.
Yeah.
Yeah.
A lot more explaining you got to do.
Well, they just turn into lawyers after you sign the commitment agreement, right? Versus a regional to a small community bank. I don't mean this to say it, but I almost don't care about the interest rate, right? It's more about the relationship and the surety that they're going to show up and fund that deal, right? And that they're going to be there. So we're increasing our look for equity. One thing that we're working on internally, kind of as a side product to this consulting platform that we have, is a co-GP fund in and sit down with young, emerging, and experienced developers that just need more cash on the GP run, so we could kind of be in the right seat with some cash. And we're getting more and more calls from equity saying, hey, we're out there trying to buy projects. The numbers aren't making sense. Would you be a turnkey fee developer and then sell us the project at CO? So that's something that we're looking at. But you're right. There's a lot of money chasing chasing deals, and the deals are a little fewer between right now.
Yeah. Especially good deals, right?
Yeah.
Yeah. That's awesome.
Well, good. Well, appreciate you coming on, though. A lot of good insights. I was excited about this one. I told you.
Yeah, me too.
I told you, Stevie G.
I feel like I have a lot of follow-up questions that are probably going to be too personal, but I'll do that off.
No, but
Good stuff for yourself.
Yeah, exactly. This secret stuff.
No, I do appreciate you coming on, Steve, and always look forward to your projects and everything you're working on in the future. And so if anybody wants to see what you're working on, how do they get a hold of you?
Yeah.
Personalwarehouse.com is
go.
is the website. There's a lot there. Happy to take a call, meet with somebody. But yeah, we're very accessible.
All right. Appreciate you, my man.
Well, thank you guys.
Thank you, sir.
Appreciate it.
Yeah.